There's a very specific feeling in crypto. If you've been in this market long enough, you know exactly what I'm talking about. The atmosphere changes. People stop asking, should I enter? And suddenly start asking, what's the next 100x coin? That shift matters, because right now, the market feels different. Confidence came back way too fast. Altcoins are exploding. Dead projects are waking up. Random garbage is pumping 40%, 60%, 100% in days. And people are getting emotional again. This no longer looks like cautious accumulation. This looks like greed returning. And greed is where crypto becomes dangerous. Because most people think bull markets make them rich. No. Bull markets expose low IQ behavior faster than anything else on Earth. The same people who were screaming crypto's dead 3 months ago are now buying green candles after a 70% move. That's how retail always behaves. Emotionally, predictably, weak. And today, we need to talk about what's actually happening inside this market. Because under the surface, there's a very important shift happening. Altcoins are taking over the attention. Bitcoin is losing dominance. Ethereum still looks weak, and the market is starting to reward gambling behavior again. That combination, that's when crypto becomes explosive, but also extremely dangerous. Welcome to Stan Chain Crypto. Let's break it down.
If you want signals like this for free, follow me on X and stay in tune with the latest trends and news in the crypto world. I post some of my intentions and trades every day, so if you feel capable of taking a beating from the market, get in.
The biggest signal in the market right now is not Bitcoin. It's the altcoin behavior. That's where the energy is. That's where the emotion is. That's where the greed is. Look at what's happening. Zcash suddenly waking up. Projects people forgot even existed are ripping upward. Hyperliquid moving like the market is possessed. Tengu exploding because people are chasing narrative momentum again. And this is important. When old coins suddenly start pumping, it tells you something psychological. The market is no longer focused on safety. It's focused on opportunity. That changes everything. Because during fearful markets, money hides in Bitcoin. But during emotional markets, money starts hunting volatility. And that's exactly what we're seeing now. Speculative rotations are becoming aggressive. Capital moves faster. Attention moves faster. People stop researching. They start chasing. That's why these explosive altcoin moves matter. Not because the fundamentals suddenly changed. Most of these projects didn't magically become revolutionary overnight. What changed is the psychology. The appetite for risk returned. And once risk appetite comes back, crypto turns into a battlefield. Because now everyone believes they can become rich quickly again. That belief creates irrational price action, and irrational price action creates insane volatility. This is where inexperienced traders get destroyed, because they confuse momentum with intelligence. A coin pumping doesn't mean it's strong. Sometimes it just means the market is drunk. And right now, the market is starting to look drunk again. Now here's where things get very interesting. Bitcoin has not been leading this move. That matters more than people realize. BTC has been relatively sideways, slow, heavy, almost exhausted. Meanwhile, altcoins are outperforming aggressively. That tells you capital is rotating away from safety and into speculation. This is one of the clearest psychological signals in crypto. When Bitcoin dominates, the market behaves cautiously. When altcoins dominate, the market behaves emotionally. And emotional markets create extremes. People suddenly think risk management is for losers. Everybody becomes a genius during altcoin season. That's the dangerous illusion. Because most traders only feel smart when the market is easy. Real intelligence appears during difficult conditions. Anybody can make money throwing darts in a euphoric alt market. That doesn't make you skilled. It makes you lucky. And the scary part? A lot of new traders entering now have never experienced a real market flush. They've never watched a portfolio collapse 40% in 2 days. They've never felt panic. So they overexpose themselves. They use leverage. They revenge trade. They FOMO into every green candle. And that's exactly how the market traps people. Bitcoin stalling while altcoins explode is exciting. But historically, that environment eventually becomes unstable. Because speculation without discipline always ends the same way, violently. And the faster the gains become, the more dangerous the market becomes underneath. Most people only see the upside. Professionals watch the behavior. And behavior right now is becoming extremely emotional. Now, let's talk about the part nobody wants to discuss. Ethereum, because despite all the excitement, Ethereum still isn't fully confirming this move, and that matters a lot. Historically, when crypto enters a truly healthy expansion phase, Ethereum usually shows strong leadership. But right now, Ethereum still looks questionable compared to the aggression we're seeing across speculative altcoins. That divergence is important, because not all bullish moves are equal. There's a difference between sustainable expansion and temporary euphoria. Right now, parts of this market feel more like euphoria. Ethereum underperforming while random speculative assets explode creates a weird imbalance. It tells you the market may be prioritizing excitement over quality. And when excitement becomes the main driver, logic disappears. That's why smart traders stay emotionally detached, because emotional markets can move much higher than expected. But they can also collapse without warning. And Ethereum right now is one of the biggest warning signs that not everything is perfectly aligned yet. Does that mean the market immediately crashes? No, absolutely not. In fact, euphoric phases can continue far longer than people expect. But strong traders don't just look at price. They look at structure. And structurally, there are still inconsistencies. That's why blindly screaming supercycle every time altcoins pump is low-level thinking. Real market understanding requires nuance. And nuance is rare in crypto. Because social media rewards emotion, not intelligence. Now, we get to the most important part, the dangerous part. The market is starting to reward gambling behavior again, and that changes people fast. You can already see the psychology returning. People bragging about leverage, people posting ridiculous profit screenshots, people pretending they're financial masterminds because they bought a meme coin during a momentum wave. This is late-stage behavior. And crypto always becomes psychologically insane during these phases. Because greed destroys discipline. Once people start making fast money, they stop respecting risk. That's human nature. The average person cannot handle sudden success, especially in crypto. They become addicted to dopamine, to volatility, to excitement, to gambling. And meme coins amplify that behavior to the extreme. Most people buying these coins are not investing. They're chasing emotional stimulation. That's the truth nobody wants to say. The market becomes a digital casino, and social media makes it even worse. Because now everyone compares themselves to fake winners online. A guy turns $500 into $50,000. Suddenly, millions of people think they can do the same. What they don't see? The thousands who lost everything trying. That's why emotional trading destroys people. Because emotion removes discipline. And once discipline disappears, the market owns you. The scariest part? The market rewards bad behavior during euphoric phases. Over-leveraged gamblers make money. Reckless traders make money. Low IQ decisions make money. temporarily. And that temporary success convinces people they're smarter than they really are. That's how bubbles grow, not through logic, through ego. Crypto is entering a phase where psychology matters more than fundamentals. And most people are completely unprepared for that environment. Because markets don't destroy people financially first. They destroy them psychologically.
So, where does that leave us? Simple. The market is heating up. Risk appetite is back. Altcoins are exploding. Speculation is accelerating. And greed is returning fast. That creates opportunity. Massive opportunity. But it also creates danger. Because emotional markets reward stupidity right before they punish it. That's the cycle. Every single time. So the question isn't, can the market go higher? Of course it can. The real question is, can you stay disciplined while everybody else loses control? Because that's what separates professionals from emotional gamblers. The market will tempt you. The market will manipulate you. The market will convince you that risk no longer exists. And the moment you believe that, you become exit liquidity. Watch the psychology, not just the charts. That's where the real signals are. If you enjoyed this breakdown, subscribe to Stan Chain. And remember, the market doesn't reward emotion. It punishes weakness. See you in the next one.